There once was a young man that wanted to make money in the stock market and figured he could trade his way to riches. He started with $2,000 and had made some decent trades, building up his account to nearly $10,000 in a couple of years. Yet, he got greedy, made some risky trades that forced his hand too much, and started to panic when things went downhill. He ended up losing his gains and was down to $500 in his account in very short fashion. That young man was me. Yep, I have had costly mistakes in my journey for sure, just like everyone else. You're probably thinking, that won't be me. You're just an idiot. Well, I admit, I was dumb at that time. I've taken some time to reflect on my experience, and I would like to share with you that while stocks can help you grow your wealth, they aren't a guaranteed way of making money in the short term. The reality of stock market returns. As of the end of February 2024, the average yearly return for the S&P 500 is 9.24% over the last 150 years. That means on average, if you were invested in the S&P 500, you would gain 9.24% every year. Pretty impressive, right? Do keep in mind, these numbers are averages and that higher or lower gains, or even losses, can happen in several years. This also doesn't mean that all of the stocks returned the same. Some stocks, like newer tech stocks or commodity stocks, tend to fluctuate rapidly and can result in massive losses or gains apart from the index. Companies that are considered cash cows and offer reliable dividends don't see their stock prices vary as much as, say, mining stocks, oil and gas stocks, or even tech stocks. Not that they can't fluctuate, especially in a downturn. So, what's my point in all this, you might ask? The point I'm trying to make is that stock market returns are not uniform. They vary from month to month, year to year. Unfortunately for me, I thought I could trade my way to riches, and if I had stayed focused on making smart purchases and holding them, I would be far better off. It's better to buy for the long term than try to time the market and make lots of trades. But there is one thing. The stock market takes time to grow wealth. As stated before, 9.24% in a year might seem impressive, but unless if you have millions of dollars invested already, that 9.24% isn't going to be that impressive, especially if you only have $1,000 in the market. The stock market is a lousy way to make a quick buck. If you want to be in the market, you better be in it for the long run. Forget about making $100,000 in a couple of months. That only happens if you get lucky and already have large sums of money to invest with. If you only have a couple grand, the odds of you striking gold and hitting millions in a year just aren't realistic. The dangers of get-rich-quick schemes. Have you come across ads on Facebook, TikTok, or Instagram that show people trading, making huge sums of money, and going on lavish vacations everywhere? They claim to know how the market works and make you think they have an AI algorithm that has finally cracked the stock market code, it seems. And if you pay them $99 a month, you too can have access to this AI that tells you what to buy, when to buy it, and when to sell to maximize profits. Allow me to let you in on a not-so-secret secret. They're lying to you. Any smart person knows you can't time the market, and you can't pick the perfect stock to run up a quick profit. Doing that is a shot in the dark, blindfolded, while dueling the world champion fencer. It's just not possible to do consistently. Moreover, these gurus that sell you the dream are making more money selling you stock tips than doing the trades, because they aren't making money on the trades. They don't have actual proof that their AI algorithms make money. They just show some fancy charts with 101 lines drawn or through them, and make it look like their bots bought and sold at the right time. They tug at your emotions to buy their bots, trying to convince you that if you don't, you'll always be a loser, making minimal gains, if any, in the market. Beware of those that try to sell you the dream of trading stocks to make money, and try to pull at your emotions, and make you pull at your credit card. Speaking of emotions and trading, that's another risk of get-rich-quick stock schemes to be wary of. The moment your emotions start guiding your decision-making, you lose. When it comes to the stock market, emotions don't matter. What matters is finding undervalued stocks that have a long time horizon, buying them at discounts, and then holding them for a long time. Warren Buffett, the world's greatest investor, doesn't day trade. His wealth was built by buying good stocks from good companies at a discount and then holding on to those stocks. While we're on the topic of day trading and emotions, there's another thing you'll want to be cautious about: leverage and margin calls. When these come into play, your brokerage may allow you to trade their money in hopes that you can earn more. While it's possible that you might, trading with leverage is scary business. Imagine you take $1,000 of your money and $1,000 from the brokerage and you bought into a stock. If that stock value drops, you're not only losing your money, but you lose money for the brokerage as well. If the stock drops down too much, the brokerage will force you to trade out of that position at a loss, leaving you with potentially nothing. If someone tells you to trade with leverage, that's not someone you generally want to hang out with. Alternate strategies for wealth building. So, day trading, stock tips from nobodies, and leverage trading are out of the question. The only thing you need to do to build wealth in the stock market is to buy undervalued stocks and hold on to them. But what if you don't want to actively manage your own portfolio? Well, that's where index funds, ETFs, and mutual funds come into play. Yes, there can be additional fees to invest in an ETF or mutual fund, but they do all the work for you. All you have to do is contribute to your choice of investment on a regular basis, and the fund manager will take care of the rest. Mutual funds and ETFs are a fantastic choice for those that want to get into the market without having to do the research, as you can own multiple funds within one fund, all for a lower price than each individual stock. You can also diversify your risk across multiple stocks. When one goes down, it might not actually affect your investment value, as other stocks might go up. The stock market isn't the only way to build wealth. Commodities such as precious metals are also a possible option to invest in. Art is also another option that's gaining in popularity. And within the last 20 years or so, real estate has also taken off as a wealth building tool for many individuals as well, with people buying second and third homes to rent out. While you might think of other ways to build wealth, it's important to know that whatever path you go down, you need to research what you're getting yourself into. Before investing, educate yourself on how the systems work, what you need, what the risks are, and whether or not that particular investment avenue works for you. The thing you need to remember when you're building your wealth is if the investment vehicle of your choice is the most appropriate for you. Your risk tolerance and time horizon will dictate what investments are appropriate for you. If you find yourself sweating at the idea of your portfolio dropping 5 to 10% within a period of, say, 6 months, you might not want to focus on building up your stock portfolio. You may want to consider lower risk options such as bonds and term deposits. The way you need to view stocks, the stock market, and investing in general isn't to make a quick buck. You need to view it as a way to build long-term wealth. I encourage you to learn more about the stock market, mutual funds and ETFs, other investment vehicles, and ultimately yourself. If you find that you don't have the risk tolerance nor the time horizon to invest in the stock market, you may want to find alternative investment vehicles. If you want to learn more about wealth building, be sure to subscribe to the channel for weekly videos on wealth building tips, and check out my video on how to save $100,000 quickly. Thanks for watching, and I'll see you in the next one.